Good afternoon.
The Federal Reserve just cut interest rates by 25 basis points. At first, the dollar dropped, which is what you'd normally expect when rates are cut. But then something interesting happened. During Powell's press conference, the dollar completely reversed and ripped higher. In this video, I'll break down exactly what happened, what Powell said, and most importantly, how you can read these reactions to stay ahead of the markets. Let's start with the basics. The Fed cut rates by 25 basis points, bringing the federal funds rate down to 4% to 4.25%. It was a split decision. Moran wanted to go bigger with a 50 basis point cut. Bowman and Waller didn't want to cut at all. When the statement first came out, it read dovish, talking about slow jobs gains and rising downside risk to employment. Markets immediately priced in the idea of a new easing cycle and the dollar dropped. But then, at 7:30 p.m. UK time, Powell started speaking and everything flipped. The statement itself sounded like the Fed was getting worried about the labor market. It mentioned job gains slowing, unemployment edging up, and clearly flagged that the risks to employment are now on the downside. That's why the market's first move was dollar bearish. But then Powell came out and reframed the whole decision. He called this a risk management cut and made it clear the Fed isn't planning an aggressive cutting cycle. He literally said, we don't need to move quickly on rates. In other words, this was a small, cautious step, not the start of a race. This is how it played out on the dollar index, and we could see in real time repricing happening in the market. So here is the 7 p.m. candle, and this was when the rate decision dropped. And a couple of moments after the rate decision, we also got the statement, and we can see the dollar had very clear downside, and this was traders reacting to the idea of a looser Fed. And then we can see consolidation up until 7:30, and this is when the press conference began. As Powell started talking and clarified their stance and objectives, we can see the dollar decided to reverse and move higher and continued to push up throughout the speech. And this dollar bullish reaction continued up until the start of London session this morning. And this is an extremely great example of why you don't trade the rate decision. You should wait for the forward guidance. The real forward guidance comes from the Fed's dot plot, which shows where policymakers expect rates to go over the next few years. 2025, most dots are between 3.6 and 4.1. That means we're likely to just get 1 or 2 more cuts this year, and that's it. 2026, the median falls at 3.4, which is still very high historically. 2027 to 2028, rates bottom out near 3%, and in the longer run, neutral sits at 3%. This tells us two things. The Fed plans to cut slowly and carefully, and secondly, the rates stay positive for years, which is bullish for the dollar. Alongside the dots, the Fed released its Summary of Economic Projections, or known as the SEP. GDP growth was revised slightly higher for 2025 and 2026. This signals the Fed doesn't see a recession coming. Unemployment is meant to drop gradually over the next 3 years from 4.5 to 4.4 to 4.3. Inflation is expected to stay where it is for this year in 2025 and then drop through 2026 and 2027. Here are a few of the most important lines from Powell. This was a risk management cut. We don't need to move quickly on rates. Downside risks to employment have risen. Tariff-driven inflation is temporary. If we combine these things, Powell is saying we'll cut if we need to, but don't expect a flood of easy money. This is why the dollar fell at first and then rallied higher. Initially, we can see after the rate cut and the statement, there was a clear bearish or dovish tone in the market, with the dollar moving down, euro dollar up, gold up, and the S&P subsequently up. However, then once Powell came on to clarify that this is a more slow cutting cycle than what people initially thought, we have the reversals, with the dollar aggressively moving up very quickly, euro dollar down, gold down, and the S&P also down. The markets realized this wasn't a panic cut, and we weren't in for an aggressive easing cycle. Going forward, there are a few things we need to pay attention to. First of all is jobs data. If we see the labor market deteriorate even further, the Fed might be forced to cut faster. Inflation data, such as CPI and PCE, and of course, the Fed speeches. Watch for any shift in tone ahead of the next meeting. So to summarize and recap, the Fed cut rates, and they will continue to cut rates, but much slower than what we may have expected. Powell made it very clear that they are not rushing into an easing cycle. Real rates do remain high, which will continue to support the dollar, especially against lower yielding currencies. So while I'm not a super bull on the dollar, I can see a valid argument to want to be a buyer in the medium term. And this will be as we see rate cutting ideas getting priced out of the markets. However, it will heavily depend on the data that we previously mentioned, such as labor market and inflation. I hope this video helped clear things up for you. please drop a like and subscribe. It does help me out a lot and I do really appreciate it. If you want to trade side by side with me, follow my trades, and also learn from me, you can join my Discord. Link is in the description. It's only $15. Thank you for watching, stay safe, and don't get margin called.